for our Options Insight segment. And Abigail, I know you've been taking a closer look at that, particularly when it comes to money flows and yields.
For sure, Romaine. And when we bring the yen into the equation, last week we saw a little bit of a move down for stocks as that yen strengthened and concerned people that maybe that yen carry trade could come off on the idea of yield curve control. Samantha LaDuc of LaDucTrading, I know you were thinking about the BOJ and what could potentially, I believe back in February, you were saying that you were paying more attention to what the BOJ is doing than what the Fed's doing because it could have such a profound effect on the markets. Where do you stand now?
Well, they did actually follow through with that live meeting in July and announce their tweak, which was really a limit of that 1%. But as I've mentioned, this is actually very bullish Japan. It's the Buffett bet as it relates to higher commodities bet there and lower bonds. So the excitement really was pre-announced on that Thursday of last week when we had a little trip in volatility, given that they were kind of, teasing at the fact that they were going to tweak. Well, they did in fact follow through. So that actually triggers a potential for quite a long and, risk, if you will, in our yields as it relates to this carry trade unwind. So that's definitely what I was looking for. And as a result, you can see how our 10-year U.S. yield has definitely percolated higher, and rising yields can definitely equal risk off. I know earnings you're pricing in, future rate cuts by the Fed. I think they're going to reverse that. I think wage inflation has been incredibly strong. We started kind of 2021 where wage inflation was still below inflation. We have caught up in 22-23 where inflation, wage inflation has now not only caught up to inflation as it's decelerated, but now it's outpacing it. So that's one of the reasons I think strongly that we have delayed recession. But I think we're going to move in.
Well, if we bring the idea of yields rising into the picture, we of course have already been at the levels that we're at on both the 2-year and the 10-year. So how much higher do we have to go on either to bring in that risk-off picture that you're talking about? And does that mean that the VIX, do you see the VIX spiking higher on that? Would it be a real sell-off for stocks?
Yeah, I actually think that bond bulls need to defend here. I had actually whispered that last Thursday when we broke and have fallen since, and we're actually on some really key levels where bond bulls literally need to defend here. Not that I'm expecting Fed to come in with more purchases, but perhaps the dollar will fall relatively, and that'll help. Otherwise, yes, I do expect VIX. In fact, I think this is a really good market to buy protection. It's priced for perfection. We've got some, as we discussed prior, this mega cap concentration risk that has been running very strong since January, and then post-bank bailout, and it is basically loose monetary policy at its finest. But we're now at a point where after Apple and Amazon report, it's kind of buy the rumor, sell the news backstop. And we've got shorts in hedge funds that have covered very strongly June and July, basically the largest in 6 years. So this is a very big, positioning tell also that we've had fabulous NASDAQ rebalancing. Special rebalancing had to come into play because we're too overweight the mega cap tech. So there's going to be, I think, this mega cap tech softness and value rotation rest of the year. But I definitely see yields as a tailwind to heading higher.
Yeah, it's kind of amazing that New York FANG index of mega cap tech stocks up more than 80% this year. If ever there was a short squeeze, that could sound like it. And if it doesn't continue, maybe it will be an issue for the bulls. Samantha LaDuc of LaDuc Trading, thanks so much for joining us for Options Insight today. And from New York, this is Bloomberg.